Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard.
Welcome back to the show, John. What's coming up today?
Jim, we're going to talk about some green shoots that I'm starting to see that may signal that next year could be a turnaround year for the resource juniors.
How is the end of the year shaping up so far?
White gold juniors are starting to attract some buying activity. Gold is charging towards 2,100. The reason is the market's starting to believe that with inflation coming down last month to 3.2% in the United States, that the high interest rate policy of the last 18 months may have subdued inflation sufficiently to allow an easing of interest rates before everything gets overdone and economic growth goes into reverse. Now, China still has a significant problem. In fact, its post-COVID rebound has been so poor, hampered by the incredible real estate problem that they have over there, that Xi Jinping is even reversing his bashing of America and had a meeting to try and patch up the relationship between the United States and China, because China needs the export economy of the rest of the world. Where this will go, I do not know, but there seems to be an appetite for gold. Now, we're still seeing a lot of selling. This capitulation selling is still hanging over the market, the green shoots come in the form of when a company is putting out a good news release, it is attracting buyers, even if it is short-lived. Now, this is a very fun period for me because I'm building my 2024 bottom fish collection, sifting through all these companies. The majority of them are dead in the water, but I'm finding all kinds of interesting jewels with really beaten up stock prices, but management that is still alive and kicking and has got plans for 2024. And an example is Copper Road Resources, which I flagged as a bottom fish at 8.5 cents, 9 cents at the end of October. It has the Copper Road project in Ontario at the eastern end of Superior Lake. The story is a continuation of the copper fields that are in the Kinawan Peninsula that are part of the mid-continent rift that took place about 1.1 billion years ago, and the structure continues along through under the Great Lakes, but also comes onto land at the eastern end. And there's this 30-kilometer land package which Superior Copper used to own, but now Copper Road owns, where there have been a couple of high-grade copper mines, these breccia pipes that were mined on an underground basis. And Copper Road has consolidated this entire district and has been doing drilling on this property, trying to chase these breccia bodies deeper. And in the middle of the property, the JR area, they have a number of these targets. And what's new is they have Matt Rees, who until recently was chief geologist for IAMGOLD, but was also a director of Copper Road, has developed an alternative theory to the IOCG one that the Superior Copper Group had tried to investigate earlier in the past decade. He now thinks that underneath these breccia bodies, there is a alkaline gold copper porphyry system similar to Cadia Hill in Australia and ones that are in British Columbia, Gold Galore Creek and so on. And they're developing this idea that if we drill deeper, we may find something substantial. And this would be very unusual because this would be over 1 billion years old and would have been formed during the accretion of the Grenville orogeny crashing into the continent, which basically stopped the mid-continent rift from splitting the continent apart. And they drilled several holes that extended the targets of the known mineralization deeper and reported good copper assays yesterday on Thursday, November 30th. And this stock, which had been sort of trading 9-10 cents, not very much volume, it suddenly exploded as high as 16 cents, traded 7.8 million shares, and then closed the day at 12 cents. And today it's traded a tenth of that volume and is down a couple pennies at 10 cents. So there was a surge of buying, and then suddenly it was gone. Now the question is, where did the selling come from? So there was both good and bad. The company, in its desperation, despite having all these heavy hitters such as Rob Cudney and Pat Sheridan Jr. and as backers of the company, major shareholders, they did a $400,000 flow-through unit financing at 7 cents with one of those grinder brokerage firms in Toronto. And this paper came free trading in the past week. And I think everybody clipped their warrant and flipped their flow-through stock into the market for their 6 cent profit. Even though selling in the same year as you take your flow-through benefit, doesn't defer your taxes, because you end up having a zero cost base on from whatever you get from selling the stock. So you have, on the one hand, new money coming in, seeing a story evolving, seeing that the story has scale, and at the same time you have these people who are investors who are still in capitulation mode and happy to sell. So we have a situation where if a company comes up with news that builds the story at least incrementally, buyers will come in, but there's also willing sellers. So you don't have to chase a stock higher because it is finally game on. This is a really, really interesting situation in this market. And after 10 years of a bear market, people are thinking, well, maybe it's permanent, but maybe it isn't. And another example was Delta Resources, which I flagged as a bottom fish in early October. They have the Delta 1 gold project near Thunder Bay in Ontario, where they have been drilling a zone, extending it, and when they chased it across the fault, that were high expectations. They financed during the summer, and when they produced the results, it was right after the financing came free trade, and the results weren't quite as high grade. They haven't found the shoots yet that they're going, that are within this structure, and the market dumped on the stock, and it was down to 9-10 cents. And then on Wednesday, suddenly the stock traded 4.6 million shares, as high as 13.5 cents. What was going on? It was like grinding, trading less than $500,000 shares a day. What was going on? I called up Frank Candido, and he was actually in Zurich at a conference. And this is very unusual. So there are these small conferences where these companies exhibit or present, and there's some speakers who sit on the panel. And apparently Delta was mentioned by a macro panel when they were asked, give us some good gold stocks, and they mentioned Delta for the classic bottom fish reasons. And normally this would do absolutely nothing, because the people who attend these conferences in Switzerland tend to be money managers or high net worth people who go to these conferences to hang out with each other, eat the free food and drink the nice wine, and hardly ever is there any buying afterwards. But that day when the Canadian market opened, Delta suddenly underwent a flurry of buying. There was no crosses or anything. It was buying from all over the place. This was, unbelievable as it may sound, Swiss investors responding to an idea that came up at a conference. So again, another sign of a green shoot. And this company Delta will be going back to the property with a major drill program. It's funded to do that. Copper Road is going to do a deep IP survey to see if there is a sulfide system much deeper than has ever been drilled at drilled at the Copper Road. In fact, deep penetrating geophysical surveys have never been done along this copper-rich 30-kilometer belt, and they can drill any time next year. So they'll be in a position next year to raise money at hopefully better prices than the current level. So again, this is a fantastic bottom fishing season. For those people out there who would like to participate, there's a warning in January. The price of the $450 annual membership changes substantially. If you subscribe now, in December. You will be grandfathered to continue to renew at that level indefinitely, or at least as long as I run this subscription service. But if you wait till next year when the market is red hot and want to subscribe, well, it'll be a lot more expensive paying $200 on an auto renewal basis per month than paying $450 during this month and watching all these bottom fish that I'm coming up with, having a lot of fun discovering companies that are brand new that I've never even heard of, that have great stories. Their prices are down and out. This is a classic bottom fishing environment, and it's made better by this overwhelming sense that everything is coming to an end for the Canadian junior resource sector. But I'm seeing signs that maybe not yet.
Anything new in the James Bay lithium area play?
As I mentioned earlier, the yellow gold is starting to take some of the thunder away from white gold, lithium. And the lithium price trend has not been helpful. On Thursday, November 30th, it was down to $8.13 a pound lithium carbonate. I've argued that one really should be thinking $5 to $10 per pound long-term as the reality. One should keep in mind that we need a 600 to 1,200% supply expansion by 2030 to meet projected electric vehicle sales by then. And the game right now is about finding deposits that are 1% or better. But people are mesmerized by the optics of a falling price. They don't really understand that the narrative is not about where the price is going to be tomorrow as it is with gold. Gold needs a higher price. In fact, gold going through $2,000 and actually turning that into the base rather than the ceiling, that would be a huge psychological shift for the market's perspective. And that may be finally happening. In the case of lithium, it's a completely different story. But another reason the whole lithium space has stalled is since Patriot Battery Metals put out its world-class resource in August, that stock has lost 35% of its value. It's now below $10 a share. And they are drilling and they're coming up with even better intersections of LCT-type pegmatite at their Corvette project. But the market doesn't care because it now sees PMET as well. They're entering the feasibility demonstration trough. Somebody's going to buy them out. It's going to maybe end up being somewhere between $15 and $20. But until that happens, nobody cares. What the James Bay lithium area play really needs is a new champion to emerge. And everybody has been looking at Brunswick Exploration's Mirage project as the next PMET. So, but Brunswick has not put out a meaningful news release since October 5th. It has raised money, another $5 million, $6 million recently. On this Monday, they put out a press release, which was a bit lame, but the stock has managed to hold up. What they announced was that they had accelerated the 4-year commitments for the earn-in from Globex Enterprises. And, supposedly that's a sign of bullishness. And in a sense, it is. Because when you are an accountant and over-optimizing and doing just-in-time payment of stuff so that you can grind a few pennies of interest out of the money by paying only when it's due, that exposes you to future risk in the form of perhaps something being discovered that was not right, especially if Mirage turns out to be world-class on a par with CV5, perhaps even bigger and better. That's when all the greed kicks in. So what Brunswick has done is it's basically taken the steps to fully vest for 100% in the Mirage portion of the property that they optioned from Globex. And if Jack Stock has any sort of objections. Now's the time to make the objections, and so they get this done. They haven't yet done anything about those inlier claims, option from Osisko Development, which are going into the electric elements spin out. That's still a worrisome problem because based on the way they're describing the Mirage pegmatite field, it has a lot of strike, it is very wide, and that means it passes through these inlier claims. So seeing that settled would also be very helpful. But the market's becoming quite impatient with Brunswick because they do these presentations. Yeah, it's doing wonderful and all this kind of stuff, but the market wants to see results. At a minimum, it wants to see what the distribution is of the outcrops on that property. Where are they drilling the holes for which assays are pending? What sort of geometry is starting to take shape? What is the scale? And we're becoming concerned that we may see a negative market reaction when they finally do publish something, as we saw with Q2 Metals when it reported the intersections at the southern end of its trend on the MIA property, and the market didn't really understand it and sold the stock down. So everybody's now watching. Is Brunswick going to deliver the goods? Now, in Monday's press release, they did say the winterized camp has been put in place, and there will be a 15,000-meter drill program happening in the first quarter. So that's a very substantial program. So they are signaling that what we have here is going to the delineation drilling stage. This is not us poking around trying to see which direction this thing strikes and where it dips and whether it pinches and swells or anything. They are signaling that we have a PMAT here rather than a peanut, but the market is in a show me mode. And hopefully next week, and I've been getting tired of predicting a meaningful news release the next week, maybe next week we will get such a news release. Even if it isn't assays, it would be nice to see what it is that's taking shape in front of their eyes that makes them so bullish with their body language.
John, thank you so much for the update.
You're welcome, Jim.
I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.